you get this big bill. It's like, oh my goodness, do I have the money?
Even a business owners who are doing very well and who have full-time accountants and who file on time, they also feels the surprises, and when they open the tax bill they go like, wait, what?
I mean, what it does is, right, the emotional stress. Is there enough money to cover it? Taxes shouldn't feel like a surprise. But for most business owners, unfortunately, that is what happens. Hi there, Salim Omar here from Straight Talk CPAs. Today I'm joined in this episode with Sabir. He's a tax advisor. Sabir, welcome.
Thank you, Salim.
Most business owners, taxpayers, it comes in when it's not expected. It's a surprise tax bill that they're not happy about. What's
Yeah, I mean,
the reason for that?
yeah, so in a technical term, we call it as a reactive action, because they generally look at their financials when the due date comes, and it is a reactive cycle. So
Mm,
they do not have a breathing room, because what has happened, that has already happened. Now they do not have enough room. They do not have a design time. So it's like, looking at your own health the day before you are having the surgery. So that's
mm,
why, it's like the lack of the proactiveness leads to that kind of stress. And that
mm.
stress can be a emotional stress or a cash liquidity stress, because ultimately everything is about a cash, right?
So people think they're thinking along the lines of tax deadlines, right? We know the tax deadlines, like the big ones for a business owner, March 15th, when business tax returns are due, partnership, S corps, and so forth. And then there is the personal tax return deadline, April 15th. So there's panic there. And then those that filed an extension, then they go into September, October, when the business tax return extensions and the personal tax extensions happen. Now, here's what's interesting: nothing happens for 8 or 9 months in between those dates. Most business owners only think about taxes when the tax calendar is forcing them to, right? So there's, as you said, like there's no design time. Yeah, it's reactive when tax deadlines are there. There's no proactive mindset of, hey, what are we doing in those 8 or 9 months?
Yeah, so a lot of owner thinks like that. They think like tax work equals filing. So they generally first do the bookkeeping, then
Mm,
they file the tax return and they make the payment. So that is what we called a compliance mindset, and that's a reactive mindset. And if I explain you in a more like an easy term, so it's like compliance tells you what has already happened. So that's like a reactive mindset. You cannot do anything. What has happened has already happened. There is another mindset, we call it a strategic mindset. So for that, what we need to do is they need to review the financials at a regular interval during the year, as opposed to like visiting them when there is a due date.
To further talk about that, and you mentioned strategic, right? What does strategic look like? What does proactive look like? It means regular check-ins, yeah, with your
Yeah.
advisor, yeah, mid-year tax planning, super important. End of year tax planning, super important. And then forward-looking thinking. It's not,
Yep.
compliance was what happened, and now strategic is what's going to happen, and it helps to not get that surprise tax bill. When the more strategic we are, the more it's planned. And something we do, we won't allow not doing this. At the minimum, you should know your tax position at mid-year, and then you want to know your tax position at the year end. That's how you're going strategic and not reactive, not using tax deadlines as when things happen.
Absolutely. Let me share experience I had with a client. So
Mm,
we just discussed this point, like revisiting the financials mid-year and before end of the year to avoid the last hustle, right? So what he shared was he just came to me and told me that okay, he wants to do the contribution to IRA, he wants to do the contribution to health saving accounts, and his solo 401ks, right? So
mm,
when I heard this, I knew one thing at that time, that now the client is knowledgeable, right? He knows where he can invest his funds, right? But
mm,
what it lacks was it was a timing. So we were having this meeting in mid January, so like 2026, and we were discussing 2025. So that's clearly shows that even the clients who have a knowledge lacks timing, and that's what
mm,
brings them anxiety and frustration. So those IRAs and HSAs, the last date is 15th March, so technically they still have time to do that, but
mm.
when I said you can maximize it with a $15,000, like 7,000 to IRA and 8,000 to HSA, so then he said, okay, I have time, but I don't have fund, right? Because
Mm,
he needed that fund, and he could have had that if he had thought about this strategy 6 months before. So they can put out some savings, like $1,000, $2,000 every month. So
mm,
this is like opportunity lost for them. Even there is a deadline still. So again, important thing here was timing. They missed it even though they had a fund, right? And there was another case. So he wanted to do the solo 401k. So they had a
mm,
fund, but again, they missed the deadline now this time. They had the fund, but they missed the deadline because for employee
mm,
deferrals, they need to do it before 31st December. And the
mm,
most important and like talk of the town, I would say, the bonus
mm,
depreciation, 100% bonus depreciation. There was another client who had funds. He said, I want to buy a vehicle. So the more than 6,000 pounds weight, because that gives you 100% depreciation. He said, I'll invest the $60,000 into the vehicle, and I'm in the 35% marginal tax bracket. So it will save me $22,000, right? So I said, okay, so do you need the vehicle? Then he said, no, I don't need it, but I want that tax saving. So I explained him
mm,
it is still a net cash outflow for him. To save
mm,
$22,000, he's spending $60,000. So there
mm,
is a net cash outflow of around $38,000, right? So I
mm,
mean, if you don't need a vehicle, why
mm,
purchase just to save those? So
mm,
again, there
mm,
comes the tax strategy, revisiting and
mm.
aligning your investment and deductions with your visions. Most important thing along with timing as well.
Wow, that's profound what you just shared there. It's really just not the lack of knowledge. People have the knowledge, they know,
Yeah.
with ChatGPT and AI and all that, right?
Yes.
It's kind of at our fingertips of what is the IRA, what's the limit and all that. But there's these other nuances like timing
Yeah.
is one important one. Or, thinking about investing in something like a vehicle, which is a heavily depreciating asset. The moment you walk out or you drive out the vehicle from the showroom, it started the clock has started ticking of it losing its value, and people make these decisions or they kind of go there because I feel like it's not looking at it's really back to what you shared earlier, right? It's that reactive mindset. It's really things are based around tax deadlines rather than being strategic about it and saying, all right, what do I do in the 8 or 9 months in between tax deadlines? How do I design this so that I'm number one, I don't get that surprise tax bill, but then I'm paying the
Yep.
least amount of taxes possible. That's a great example you gave of the IRA, the HSA, the solo 401k, and then the vehicle as well. Anything else that you're thinking about when it comes to uh,
I mean,
timing and being proactive versus being reactive?
yeah, so the most important is right.
Mm,
So that is another part of revisiting the regular intervals your financials, because you do not want to underpay taxes or you will end up paying late payment interest and penalties, and also you do not want to overpay taxes, right? Or else your cash would be occupied with the IRS if you overpaid it. So that's why you need an exact
mm,
estimation. I would say majority of the client, when we file the return, they come like, okay, we do not have funds to pay taxes, so then
mm,
they'll have to do that installment payment system with the IRS, right? So to avoid that, estimated taxes are the best option, because the most important thing which regular intervals reviews bring you is what you will pay. I mean, not exact accurate amount, but at least 90% correct guess. You can guess that, and you can start saving those funds from the very first month. So the another very great example is estimated taxes, paying it regularly on time, and try to be more accurate, because you not want to end up paying very less. You will pay estimated penalties, and you also don't want to pay overpayment amount, because then your
mm,
cash will be trapped with the IRS. So I would say like both are the symptoms of guessing. So instead of doing
mm.
that, we can do that review meetings, regular intervals.
This is, I mean, really what you just said there. Yeah, it helps with not having the surprise tax bill. It helps with not the cash crunches. It's like, oh my goodness, I need to put money into an HSA. I don't have the money. I wasn't planning for this. And it causes frustration for the taxpayer. It causes frustration in just the stress, right?
Yeah,
And feeling
definitely.
blindsided. And, there's anxiety despite success. And we've talked to a countless businesses where the business is doing well, the profits are there, but this blindsides them. This side of things, the tax angle, the tax thing blindsides that. And the hard part is most owners think this is just how taxes work. It isn't. We are here to say that it isn't. It's usually just a planning rhythm problem more than like taxes being the problem or why people face what they end up with when it comes to taxes.
Let me say this: taxes aren't supposed to be a 1 year event, and it
Mm,
needs year-round conversation. So, like when you treat them that way, your
mm.
surprise is almost disappears. I mean, not 100%, but yeah, 99.99% it would disappear.
Yeah.
Yes.
And I should have said this earlier, but I just remembered it is, taxes are one of the largest expenses a business owner has. Businesses are doing well. They have the profits, they're paying taxes on it. It's one of their largest expense, closer to payroll, sometimes even higher than their other big expense, which is payroll. And if we can be strategic about this one big large expense item, it can save two things: mental health. Number
Yeah.
one, all the frustration, the emotional stress we talked about, and then it can actually save you money on taxes. So we really appreciate having this conversation with you. Enjoyed it, and thanks for sharing your insights and some recent examples, conversations that you've had with business owners.
Thank you, Salim. I really enjoyed this conversation, and we'll be keep revisiting these kind of things which are beneficial to the clients and all the taxpayers and the small business owners.